Welcome to the very first ever the AJ Brown Show streaming live on. We got this on YouTube, on Twitter, on Facebook. And if you guys don't know AJ, you probably should because you're watching it on his channel. He is the founder of Trading Trainer, and in my eyes, he is a trading guru. Right? I mean, anybody who's been successfully doing these things for 15. I think in one of the ads we put 18 years now, with a very consistent strategy. Is a guru and is an expert in my opinion. My name is Cyprian Francis. I am a producer, trader, entrepreneur out here in LA, and working with AJ. AJ, where are you broadcasting from today?
Today we're at my home in Washington, D.C.
Okay, so you're starting to see the fall seasons come around, yeah?
Yeah, definitely seeing the fall season. The leaves are just starting to change colors here.
Cool. So the date is October 8th. It's a Friday. It's a Jobs Friday, right? Jobs Fridays usually tend to move the markets, but I don't know if that's anything that you really care about because your strategy is more of a midterm to long term. So, what are your thoughts on what's going on today with this jobs number?
Well, anything that moves the broad market's going to, raise up on our radar. We do a broad market analysis every day, usually after hours, to see what had happened for the day. But with respect to these employment numbers, I mean, everybody knows, especially the folks at Wall Street, they're not dumb. They know that there has been, stimulus put into the market during the pandemic. And so it's hard to put any sort of real validation behind the numbers that were released today, right? They said at one point that the jobs number was very low, but then you look at the unemployment rate and it's also incredibly low. You see the participation rate, that's low. So basically, people are not people are wondering, are we just getting the fluff out of the system? So you don't really see Wall Street reacting too much to those numbers today because they don't put any kind of credibility behind them, I think.
Right, and just the fact that we are coming off of this pandemic, and so these job numbers are, not really correlated to the realities, right? Because so many things are still changing.
That's right.
But the market, let's see, is reacting, I think, positively. No,
Yeah.
we're about break even now, so we'll see. It's one of those types of days.
Well, the
Um,
market has been on an uptrend for quite some time. If you pull up a chart on the S&P 500, you'll see that it's been on an uptrend, and it just recently started to pull back. We saw a retracement greater than 100% in the down direction. We had a little pop there about maybe a week and a half ago, and then it went down. And now we've got a reversal. I mean, I'm not a complete believer in the whole Elliott wave thing, but if you look at your screen right there, that's a picture perfect Elliott wave, which tells us that as of yesterday and part of today, we're probably on our way back up. Now, whether that happens or not is another thing. But remember, what we're doing when we place our option strategy on things is we're trading the time component. So the actual directional move is less significant for us. We need to know it, for a little bit. But for the most part, we're letting options act as kind of a way for us to make money as time passes by, not so much on the directional move. So the underlying symbols can move up, but they can also move down and they can move sideways. And no matter what happens, we're going to be collecting our premiums.
yeah, so that's basically your main principle
Yeah,
behind your 18 years is this selling premium. And I know that my demo, which is a little younger, probably doesn't really understand what that means. But it is what we would call a derivative, right? The
sure.
option, right.
Yeah.
So give me a quick rundown of if you had to explain to the guy walking down the street what selling premium is.
Well, all right. So options are, like you mentioned, a derivative of stocks, ETFs, indexes. And the scoop is these options give us like crazy flexibility. Like if you want to buy a stock or a commodity or something, you're going to buy it and hope that the price goes up, and then you're going to sell it, right? Buy low, sell high. Or you've heard about shorting things, right? Shorting means selling and then hoping to buy it back at a cheaper price, still selling high, buying back low, and keeping the difference. But that requires there to be a directional move. And you can use options in that way. You can use the leverage of options to capitalize on these directional moves. But options also have an expiration date. And that makes them very cool because they have a component of their value called premium. For you academics out there, it's called the extrinsic value, and that wastes away with time. And it's kind of like human nature, Sip. Like, how a lot of people procrastinate to the last minute to do something? Well, you see that in the price of the option premium. It stays somewhat constant, and then in that last month before the due date, before that deadline, it starts to lose its value very quickly. Like people are just waking up saying, oh crap, what do we do? So if we sell those options, it's called selling premium for that high price and then let it waste away to nothing, expiring worthless, we get to keep the money just on time passing by. Doesn't matter if the underlying symbol goes up, down, sideways. We're actually making money on the fact that options are they're like coupons, right? You know how a store sends you a coupon for like $1, puts an expiration date on it. If you never use that coupon, that store just made $1 off of you, right? So it's like an expiring coupon, and we just take advantage of them.
Yeah, and that actually makes me think about, why the coupon was ever even created, right? Like when you look at it from like a transactional store, it's because they need to create some discount and generate some more revenue. But why? And I don't even know if there is, why does this option market exist? People understand stocks. You buy part ownership of the company. There's dividends. They come back. Your shares are worth more over time. So where did the options come into all of this?
Dude, options were created. Some of the options were created as early as the mid 1970s, and then more options, different types of options came in the 80s, and then different types of expiration dates have come all the way up until recently. The scoop is options are hedging instruments. In other words, people buy them to hedge against risk. If I buy some put options, I protect myself from the stock coming down. And they don't mind. It's like buying insurance for them, the people who buy it, right? They don't mind that they're going to lose some money on it because if the market takes a turn, they're protected, right? But at the same time, there's this whole market of people who sell them. And that's what we're doing. We're selling them. And just like, in other words, if you think about it, what's one of the most lucrative industries that we can think of here in the States, maybe even around the world? Selling insurance, right? Selling insurance makes a fortune, right? And that's exactly what we're doing when we sell premium. We're selling insurance to people who are worried about their stocks going up or down. And those insurance policies, 85, 90% of the time, expire worthless, and we just collect that money. What we do on our side, and what our big program, what you won't see anywhere else, is that we work on a lot of protective insurance. So not only do we sell a little bit of insurance, but we buy a little bit of different insurance to protect ourselves should something happen so that we can bail ourselves out. A lot of people talk about protecting their option trades, but they do it at a loss. One thing we do here at Trading Trainers, we make sure that the protection we buy, that we can cash in later for either the same amount or even more. So we're selling our insurance, but we've also got this secondary racket going where we're protecting that insurance with options that we can make money on later.
I feel like the selling, the coupon is a good analogy because in this example, we can create our own coupons, right? The marketplace is set up for us to go and sell coupons, but the risk there is at some point you owe something if that coupon doesn't, work out in your favor. And that's, the concept behind options trading.
So the whole thing is that you have to as an insurance company, remember, I don't know if you guys recall, but back about 10 years ago, we had a little bit more. We had the Great Recession, and one of the big insurers went out of money, right?
The AIG.
Yep, they went out of
Okay.
business, and they were insuring basically the S&P 500, right? And the S&P 500 and a lot of the mortgage securities that were backing it up. S&P was basically giving these mortgage securities, false credibility by saying they were still good, even though they weren't. So AIG was insuring these trades. Well, AIG went out of business. And what we all learned there is if we're going to be in the market of selling insurance, selling these coupons, we have to have some insurance as well. Now, what we do here at Trading Trainer, like I've been saying, is instead of just buying this insurance at a loss, so it takes away from our trade, we actually buy our insurance and then we sell it back. Yeah, I'm looking at a stock here on my screen here called Hewlett Packard, and I have like a little passion for Hewlett Packard because right before I decided to fire my boss, this was the last company I worked for. I was a marketing specialist and product engineer for Hewlett Packard all the way up until 2005. And then I haven't had a job, because job is an acronym for just over broke. I haven't had another one of those since. But I've been trading premium against Hewlett Packard. So you can see that Hewlett Packard's on a little bit of a downtrend. A lot of people think, how do you sell premium? Well, there's a bunch of ways to sell premium. It's basically selling that option premium. You could sell a put option. You could sell a call option, and we want to cover those things so that should something happen, we're not just out there hanging, without any pants on. So, for a covered call, we would buy some stock. For a covered put, we'd actually short some stock. In this case, what I actually did to cover this position is I created something called a diagonal debit spread. So in other words, if you take a look at what I did here in this little spreadsheet, I purchased some far out in time, deep in the money, what we call back month options. Why we like these options is because these act just like the stock. If the stock moves $1, then this moves $1. And I get it at a discount, right? The stock's trading. You can see today the stock is trading at about $28. I bought these things for $4.50. So I'm taking an advantage leverage, right? Because now this thing's going to move dollar for dollar with HP, but I didn't put out that much money. And then you can see a couple days later, in July 20th, I actually sold my premium. So I paid $4.50 for the underlying that's going to kind of protect myself. But then I made 44 cents back. I immediately made 10% on my money, right? In addition, go ahead. Yeah.
So these are all individual trades on the spreadsheet from 4 to 13.
Yeah, this is because what I like to do is I like to buy myself an asset that's going to appreciate over the long term. And while I've got that in my bank account, I'm making coupons from it. And so in addition to it appreciating over time, I'm also every month giving away the coupon, getting a little money in return for that coupon. I'm like that Boy Scout that comes to your door, knocks on it and says, will you buy this book of coupons from me for $10? And you get like all the coupons. I'm selling the coupon for a little bit of money. The coupon's expiring worthless. That's what's showing here, right? My coupon that I sold to this person was expiring on August 20th. On August 20th, it expired worthless. I got to keep the 44 cents that I made on selling that coupon. In addition, you can see here that I protected myself just in case that coupon, the user came and used my coupon. I bought a little bit of protection, but as soon as I didn't need that protection anymore, I sold it back. Not only did that thing protect me the whole time I held it, but I also sold it back at a profit. That's where my strategy is a little bit different, is I'm making two sources of income every month in addition to my original position appreciating in the medium to long term. So I've got three. So when I'm firing on all cylinders, I've got three sources of income going with every one of my positions.
Yeah, and I actually, since we've been working together, I've started to implement this strategy, right? Partially because Robinhood has a pretty decent options trading platform. And so the concept in my eyes was, I've got these positions in some of these names that I'm going to hold for months, if not years.
Yeah.
Why not go and sell some coupons? Because worst case
Generate some
scenario,
income.
right? Worst case scenario is they get called, right? So, right. But you earn the appreciation on owning the stock, right?
Absolutely.
So, right. And so it's almost like a riskless trade. I always just, think about how far out, right? And you probably have those strategies of how far out you need to go with the options.
That's right. You can see here in this case, it's being shorted. So we're making money as the thing goes down. You'll see here that this blue line represents me having the coupon being exercised. In this case, it's a put option. So you'll see that the underlying stock doesn't even go this low. So if somebody actually uses my coupon, like you said, I'm going to get more than the underlying symbol is worth. Right. So I'm actually okay if somebody actually exercises me, because I'll get even more than the underlying symbol is worth. And these coupons, as you can see here, they last for about a month. You could do weekly options, which mean the coupon only lasts for a week. I tend to do the monthly options, and that's just because my portfolio is kind of big. And so I need to stick with symbols that have a lot of movement, a lot of liquid, because I'm doing lots of trades. I don't want to be the only person trading this thing. So I tend to stick with the monthlies, and I tend to stick with bigger companies, which is actually not a bad idea. Some of the symbols that we're focusing on, for instance, this week, right? We're focusing on Huntington Bank. That's a pretty big company. Rite Aid Pharmacies, right? Ticker RAD. Huntington Bank is ticker HBAN. Teva, right? The Teva shoes, the ones that do UGG boots and stuff like that. And I'll tell you, you don't hear much about these companies. You don't hear about Rite Aid. Maybe you go to a Rite Aid down on your corner there to pick up your prescription or something, but you don't hear about Rite Aid on a day-to-day basis. That's because it's a freaking boring stock. And that's exactly what I like. I like the boring stocks. I like the ones that aren't going to surprise me, because I want, like you see here with Hewlett Packard. Hewlett Packard's another one, right? Boring. But that's all right, because it's got this little gentle trend, right? It's not going to be too extreme, because the investors of Hewlett Packard are all a whole bunch of old geezers, right? They're like, oh, I want my dividend, which is great, right? They're not going to let that symbol move crazy. And so I'm going to take advantage of the medium to long-term gentle trend on Hewlett Packard. But like you said, every month I'm going to sell these coupons. And in addition to selling those coupons, I'm going to hedge them. That's what this little yellow line means. And these hedging trades also, in addition to the money I make off the coupon, these hedging trades also make money. So I've got one source of income is just owning the Hewlett Packard, shorting it and letting it profit as it goes down. The second source of income is selling my coupon every month, shown by this cyan blue line. And then also I'm actually making a third source of income. This is what kind of separates Trading Trainer from the rest in the hedges. I'm making money and I'm also protecting myself at the same time. It's kind of rad, dude.
It's a good strategy, and more so it's a strategy that you stick to and you've been sticking to for a long time. And I feel like that's one of the difficult things to do in trading, or whenever someone's starting to learn how to trade, is, well, we got the MACD crossing, and we got, the RSI doing this, and this guy's telling me to trade that, and there's earnings. And so to see this is impressive, right?
Here's the big thing about selling premium SIP. The big thing is it's very forgiving, right? The scoop is with directional trading, which a lot of people are wooed by, or even some people are really excited about volatility trading, right? Trading that volatility. But the scoop is you have to be in front of the computer at the moment that the signal is, and you've got to hit it. And if you happen to have any sort of interest during the day, being with your girl, being with your significant other, or you have a job and the signal comes, and then you can't be there because you're in some meeting with your boss or something like that, you've missed your opportunity. With premium selling, it's so forgiving, right? Even if you don't hit the right signal, like within 24 hours, you place the trade, you're still going to make money. It's like one of those things that's perfect for somebody getting introduced into the market, because, you know, and the way that we architect these positions has very little risk, right? And so if you're going to start into trading, selling premium would be the number one thing I'd say to start doing, because, you know, you could start thinking about all that directional trading and stuff as soon as you get rid of your daily responsibilities. Or you may be like me and you realize, hey man, I like to do fun stuff during the day, and I rather come back in the evening just for like maybe 20-30 minutes in the evening, figure out what I'm going to do the next day, automate it in these new trading platforms like Thinkorswim or TradeStation or something like that, and then go off and be cool the whole day doing something else, walking on the beach, living your dream, man. Why would I replace a 9-to-5 job with another 9-to-5 job? I don't want to get hemorrhoids as an old man sitting in front of the machine.
Yeah, people learn that the hard way over time, right? Especially all the mobile traders now, because it is at your fingertips. And now there's crypto, and it's very tempting. But what I've appreciated about your strategy is I don't stress, I don't worry. I've got those 3 options trades on. I got the stock. If it goes down, I just lose less, but I got the coupon payments, and that's really what I like. And so that's kind of what the basis and the core behind Trading Trainer. And for anyone that's interested in learning more, AJ has a really good workshop where he goes through the strategies, the analysis, the examples, and really shows you how you can get involved in the premium selling and just using his strategy. This is an ever webinar, so you can hop in at any given moment, check it out. But also, AJ, once someone watches this, they can work with you directly. That's correct. Yes.
Yeah. We have a program, but I definitely want to emphasize that you go to that workshop, the one that's an ever webinar, a pre-recorded workshop, you're going to get the gist, right? So if you just sit through that workshop, and it's complimentary, I put that workshop together, and we keep the examples updated so that you're not dealing with things that are like 2 or 3 years old. So definitely sit through that workshop. But yes, I'd love to have people work with me and my group. My group is over 400 people strong right now. We meet every Thursday and we plan out our trades onto the next week together. And then in addition to that, anybody who's got a trade that they're thinking about on their own, we have a web portal set up, SIP, where folks can forward me their plan, and I'll actually personally look over it and tell you if I see any gotchas, right? I'll use my experience. And so that's all part of the program that we talk about if you want to work with me directly. But yeah, definitely check out that workshop. There's no cost to it. Everybody should register right now, actually. It's right there. It's on the screen, optioninvesting.org/workshop. You'll get a ton of information out of that. But then, yeah, come work with us, right? Our group has been, we target making 6% on our money every month. And the reason why we focus on 6% is if you're earning 6%, you're going to be doubling your money every year. But the scoop is my team, my folks, people in my program have been making double digits this year, double digits every month. And people have been asking me, well, what about these last couple of months? These last couple of months, the summer doldrums, the pullbacks we've been making. We don't make money on the directional movements on the underlying symbol, right? So those of you that have been making money on the directional movements of the underlying symbol, you've been at a stall during the summer doldrums. We make money as time passes by. I can't emphasize it enough that whether the stock's going up, down, sideways, and a lot of people think selling premium is just covered calls, which only work when the market's going sideways or up. But we do covered puts, we do bull call diagonal debit spreads, we do bear put diagonal debit spreads. We focus on those 4 strategies. And so we make money also if the market's kind of pulling back, like you can see here with Hewlett Packard. So I definitely think that people need to expand their horizons here, sell some premium, join us in our public group, join us in our private group. I mean, this is the best way to get going, especially if you want to get into options trading.
Yeah, and I was curious, what type of investor kind of comes in and succeeds, right? I'm imagining someone that's got a pretty big stock portfolio, but doesn't want to take on more, risky positions. But this is a way to utilize. And can you do this in like your retirement accounts?
Oh, absolutely. Right. We try to have a structure for cash. One of the things that's limiting for many of the retirement accounts is you can't do trades on margin, right? So they're selling credit spreads is immediately out, right? And even doing covered puts is out because that requires a margin account because you're shorting some position. However, there's a variant, right? We can take both in the covered call and the covered put, we can substitute the stock trade with purchasing some options. And not only does that create the cash trades that allow us to do it in the retirement accounts, but as I mentioned earlier, you can leverage. So this $28 HP trade that I've been talking about, I'm into it for $4.50, right? So you get the credit, you get the leverage, and you get it to turn into a cash trade. So we can trade up, down, sideways, no matter what's happening. And, I've had folks start with portfolios as little as $800. Now, I'm going to be completely transparent and tell you that, once your portfolio hits about $5,000 or more, then it opens up to all the different symbols that are at your disposal. But you could start with less. You'll just be limited by, the price point on some of the symbols that you'd be focused on. And, when you get to a very large portfolio, like over $250,000, or in my case, when you're, at 7 and 8 figures, then you start getting limited. Like we said, you have to focus on those symbols that have a lot of liquidity. But if you've got a portfolio between about $5,000 and about $250,000, man, this is the perfect place for you to get going because the world is the world is yours.
Yeah, so anybody that's got those fat trading accounts, retirement accounts, and you're interested in utilizing the power of selling these coupons or selling premium, I would say jump in that workshop ASAP. If you want to talk to AJ, I'm pretty sure it's pretty easy to get in touch with you, AJ, if someone has more in-depth questions. But as you said, you've got a 400 person strong group. Every week you're getting together, you're going over these strategies, and so it's no gimmick. You're in here, you put your money where your mouth is, and the results are there. And so I've been enjoying the small learning process that I've been doing, and so I'm excited to help get this message out to more people, which is why we're gonna start to do some more of these talk shows, right? The AJ Brown show. So it is Friday. So are you done for the day in terms of trading? Is everything put on the books? You're about to go relax?
Absolutely. That's, you mentioned about, what size portfolio and who would be best targeted for this. But I also want to put out there, it's also for you people that have commitments during the day that you don't want to be sitting in front of the computer, right? In other words, if you've got responsibilities, if you've got a day job still, but you want to be earning more than, say, for instance, what the Fed's giving us in our interest rates, our savings accounts, even our mutual funds, even our ETFs. If you want to be earning like we are, doubling our money about every 4 or 5 months, then this is the place to be in selling premium. And like I said, it's not it's very forgiving. It's not, you don't have to be at the right place at the right time. But yeah, for me, I'm done. I'm not going to be visiting this again until Sunday evening, and I'll be preparing. It's going to take me 20 to 30 minutes to prepare what's going to be happening for Monday. and then I'll pre-program it into the automatic trading platform, and then I won't be seeing it again until Monday evening. It's just an every evening thing, Sunday through Thursday. It's kind of like brushing my teeth. I spend 20 or 30 minutes prepping what's going to happen, putting it into the automatic trading platform, and then I close the computer.
So that means you've got some nice weekend plans.
Yeah. We're going to go do some flying trapeze.
There you go.
Yeah, that's my side. I'm in my late 40s, but I decided I wanted to run away and join the circus.
And yeah, so, I think there's some videos. There's some videos on
there's some videos out there. Yeah. So I want to join the circus. So I'm going to spend this weekend taking some flying trapeze lessons.
While the money's working for you.
It's like an ATM machine, man. I just check in on my account every day and see how much it's grown.
That's risky to say that, AJ. We might, there are some disclaimers that come with it's like an ATM machine.
It's like getting a paycheck. It really is, because I look forward to the third Friday of every month. The third Friday of every month is when the options expire. That's when the monthly coupons expire. And it's like getting a paycheck on the third Friday of every month, like clockwork.
It's the third of the month, or third Thursday of the month. All right, AJ. Well, I think, this should wrap it up for our first ever AJ Brown show. I do think that we've got, a lot more to discuss in the future, breaking these things down. But I'm excited to learn along the process and, help spread the word. So with that, we're going to go ahead and sign off. And once again, the link is there in the bottom. We'll put it in the description as well. And look forward to hopefully seeing some of you guys next week.
Absolutely.
Have a good weekend, everyone.